Hello, folks. Bill and Brian here, and we are hoping you are having a great week. And we're going to talk a little bit about natural gas today. I think Brian and I are
There it goes.
beating one another. Yeah, there we go. Hey, listen. There's a lot of things going on right now. There's always a lot of things going on. So today we're going to talk a little bit about natural gas. We've seen in the last couple of days natural gas take a really big plunge. But before we get there, let's talk about who we are. Bill and Brian, we are with energyrogue. So what we do as energyrogue is that we are trying to take you from just getting data to turn it into information into strategy, and strategy into action. Anybody can give you data. You can go out and get tons of data. That doesn't really mean a lot. But what we try to do is take that data and give it the weighting that you need to give it based on what your business is. And we talk a lot about this. You can subscribe to our service. Our service is probably one of the most let's just say it's the best deal in town. I'm not going to call it cheap. I'm not going to call it inexpensive. I'll say it's a great deal. And so for Rogue Edge, you get $89 a month. You get data, and I mean you get a lot of data, more data than you can walk through, which is why we created Premium. Premium is not only just the data, but you get a public Discord channel or actually a private Discord channel to where all of our members are talking back and we're trying to discover things together. It's a community that discusses both natural gas and crude oil. And then also you get a welcome call from Brian and I, and you get weekly videos, and you also get daily emails. So for $179 a month, it's hard to find that. I mean, it's getting to where that's almost like what? 3 Happy Meals? I mean, it's getting to where it's getting pretty expensive out there. So
hey, I'll tell you what. I can get a good look at a T-bone by sticking my head up a bull's ass, but I'd rather take the butcher's word for it.
There you go. Exactly. That's everything that we're talking about there. And so, the thing is that what we try to do is bring a little bit of fun into it. But Brian and I both have decades of experience in these businesses, working with these commodities in all different parts of the business. And I think what we try to do is to bring it to where you're a success in what you do. So won't you come join us? $89 a month. Find out what's going on. $179 a month. Obviously, we'll give you a deal if you do an annual price. But if you don't, you can back out with 1 month.
Yeah.
You can find out what it is. We're not here to try to ring you into something that you hate to get out of. This is not like some sort of streaming music thing. This is us sharing our information and our knowledge and our experience to help you understand both the energy markets, both natural gas, crude oil, also NGLs, some electricity. We talk about Europe. We talk about LNG. We talk about all these different things that you can do. And if that's not enough, we have Rogue Advantage. And that's where Brian and I will personally help you in your company specific to your needs. So that's who we are in a quick and fast deal. If you want me to go slower, I can talk a lot slower.
Freddy, Jason, Michael Myers from Halloween.
Yeah, I know all those guys. You're talking about, that's my high school class. What are you talking about?
Yeah. Well, listen, drop us a line. Let us know if you have any questions or anything, but we answer questions all the time inside of Rogue Edge. And then inside of Premium, it is interactive and it is live. As a matter of fact, this is all the discussion from today where we were talking about weather, and you get inside the week videos which recap what is happening in the market, because energy markets are rapidly changing. And so seeing what is happening on the fundamental side of the equation, on the supply side, on the demand side, on the weather side for natural gas, geopolitics.
I left out Brendan. We didn't even talk about WX weather.
WX Rogue, yes. And this is a project that we're working on with Brendan, and this is a weather oriented site for energy and agriculture markets. And we are in a soft launch. So right now you can actually see the premium charts that are in here. And we will be, for less than $1 a day, you can subscribe to this. And we're going to have cooling degree days, heating degree days, so that you can look at the forecast. And I tell you, every Sunday evening, I look at this gas weighted degree days and it tells me the sentiment of where we are going for the week. So weather on natural gas is super important. And as part of our premium package, you are going to have access to everything inside of our weather platform. So wxrogue.com is where you go to for weather. And right now it's free because we're still building it out. And then if you go to energyrogue.com and you click on pricing, it'll take you to this and just pick whichever one works for you. So enough about us.
Right. Now you can go back to those big guys that charge you thousands of dollars and stuff like that. But you know what happens?
You figure you
sometimes.
put that little box under your pillow at night, the guarantee fairy might come by and leave a quarter. Am I right, Ted? What's your point?
Yeah. So the point is, we're going to talk a little bit about natural gas this week and natural gas and weather. So many people, when they look at movements in natural gas, and before we dive there, I am going to reference crude oil. So crude oil on the crude oil side, that has had a lot of volatility related to geopolitics. We're not going to focus on crude today, but obviously with Iran's strike on Israel, that prompted the market to move up. And then Israel was weighing whether or not to place a response on oil assets in Iran. And the market was up on that expectation, and it's come back off because they've walked back some of those comments. So on that note, let's actually shift over to natural gas. Natural gas has been through a pretty wild transition after traveling all the way up to $3. That was at the beginning of October, 12 days ago. Natural gas was $3. Now it is below $3.40. So many
Below
people,
$2.40.
$2.40. Yeah. Did I say $3?
Yeah, I was going to say, yeah, it's well below $3.40.
Yes, it is well below $3.40.
Almost $1.
So many people are asking, and please do drop in comments and questions along the way. Richard, great to see you. Great to see you as always. So glad to see you in here.
Hey, Richard.
If you have any questions about this, let us know. But we're going to talk through a little bit about natural gas and natural gas markets. I'd be remiss if we didn't cover some of the highlights of supply, demand, imports, exports, storage, and that type of thing. So supply dynamics. On the production side, October is averaging 101.4 BCF a day. That is actually beneath today's print is beneath that level. So we have been dropping a little bit. There is expectation for a fourth quarter jump in production. We're going to be watching that. September, we ticked up to 101.8, and there are intra-week variations of production, but this is a supportive level. And if we look at supply this year after December, so after December, let me do this.
There you go. Yeah.
After December or February, we popped up, but after that state, we have been in a very flat oriented pattern, and that flat oriented pattern, we actually did drop down to some very, very low levels. So, but when we look at this, the last several months, we have been flatlined. So since August, we've been flatlined all the way till October. This is on a weekly basis. So we've been stuck in this 100 to 102 BCF a day. What that essentially means is that this metric that we track and we maintain is showing that we are in decline. So if you're interested about that, we cover this every week with our membership base, and we talk
Right.
about declines, we talk about whatnot, and production is really stalled. Now,
And
production.
and also all that data is available on a daily and weekly basis, updates on our platform as well.
Mhm. Yep. And then on the import side, Canada is up close to a BCF a day versus last year. So imports, this is adding some weight down on supply because we're sitting around 101, but with an extra BCF a day coming from Canada, that actually puts some stress and some strain on storage. And we'll get to storage in just a bit. But our total supply ends up being 107.5 BCF a day. And of course, depending on the day, that's going to look a little bit different. Now, on the demand dynamics, LNG feedstock is currently at 13.55 BCF a day. That is up about a BCF since
That's
last
getting pretty
month.
close to their max. I think the max is maybe got another BCF in there.
Well, there's been a lot of discussion on LNG because European storage is getting pretty close to full. So that is really key. Exports to Mexico are pretty stable at 6.5 BCF a day. That is up year over year, but we are grinding up slowly on the exports to Mexico. Residential commercial, this is about a B.5 or 1.7 BCF over last year due to colder conditions. And again, wxrogue.com, I'll put that in the chat. Rogue.com. There we go. wxrogue.com will kind of guide you on what the residential and commercial heating is looking like. And when we look at the gas weighted degree days, we are trending a little bit down and then we rise a little bit, but the end of October, we are expected to rebound. Now, many of the traders out there are projecting that this dip, which I'm going to get to in a second, but that dip, the power demand from Milton is really impacting the equation. And there are some milder forecasts for October, but this is a shoulder month. This is to be expected. So thank you, Bill, wxrogue.com. And on the weather impact and forecast, recent hurricanes, Milton and Helene, have disrupted power for millions. It is, they have restored a lot of power, and about 193 customers in Florida are without power, about 12,000 in North Carolina. I don't have a number for Georgia, but those power numbers are impacting our power utilization. So we are still strong relative to this time of year. And again, when we discuss power, this is what we typically look through is our resources on power. And when we look relative to the last couple of years, you will see a trend. And that trend is that we are setting higher lows during the winter time frame, and we are setting higher highs during the summer time frame. So our power demand, despite renewables, is growing. But as we transition to a warmer than normal conditions for mid to late October is projected to rebound on the gas weighted degree days. Now on the strategic storage, let's take a look at where we are on storage real quick. And this is the power of the platform. So real quick, back in March, we were over 300 BCF over the 5-year maximum. We have not only extinguished that 300 BCF of overhang, we've actually come within 5.7% of the 5-year max, 5-year average. So we've actually dropped so much on a seasonally adjusted average. Our difference between here and here and here and here shows about a 500 BCF delta. That means on a seasonally corrected basis, we are actually in a very, very tight supply and demand. And we actually have a great chart on this.
Yeah, and I think a lot of people don't realize is that storage is not getting bigger, but demand is going higher, is what you're about to show right here. And that as we add to demand, I mean, just think electricity demand is going up basically 4%. And so our demand, natural gas demand is climbing around I think it's 3 to 4%. And so if you keep having more and more demand, you're going to need more and more storage. But since storage is not really expanding, then you should be being in that top half of that 5-year average just to maintain with the growth in the demand.
Translated, that is going to mean increased volatility for natural gas, both up and down. So that is actually going to transition us to a very, very quick moving market, and it's going to be that much more important to pay attention because, again, in 12 days, we went from $3 to $2.40. Now imagine what that does to production companies on their forecasting, what that does for consumption companies on their opportunistic buying. So if you're not paying attention to these market moves, these are going to be very fast moving. If your business depends on oil and gas pricing, you need to stay equipped, and we're here to try and help that. So if we can help you, there's information down below. You can also reach out to us directly if you message us.
Right.
If you message us on LinkedIn, if you message us on YouTube, you can also email us at rogue@energyrogue.com. So feel free to reach out. But when we look at the strategic stock, thank you, Bill, stock and flows this week, we have pretty wide range right now. We're expected to get a tighter one later this afternoon, and we are going to update our Discord channel, which again, we talk about the market every single day, and you can be part of that community for $179 a month. But our expected range is 60 to 80. Most of the numbers that I've seen are in the low 70s. Our 5-year average injection is actually not 59. Hold on, that is a typo. It is actually 84. 84. I went the wrong direction there. So our 5-year average injection is 84 BCF, and that 84 BCF versus low 70s, we're expecting about a 5 to 10 BCF tightening. So we're going to get closer to that 5-year average this week,
Right.
and probably next week as well. So LNG feedstocks, we're averaging 13.55 BCF a day, but we hit a daily high of 13.9. And when was the last time we hit that on a weekly basis? Let's take a look.
2023, wasn't it?
No, yes, it was, I think. So let's
It was before when
it
it
was
went down.
April 2023 and in January when things are cold. We're about to enter the winter season, so this is when we do expect more deliverability out of LNG. So I expect this to continue. The one variable that we're watching is European storage, which is very healthy at 95-ish percent full. So European storage is pretty full. You're on mute, Bill.
I'll push back on that a little bit on that European storage because I think they're going to have less gas that was coming into 23 that was coming in from Russia. They still had gas in 23 coming in from Russia.
Right.
They're going to have less than that, and so they'll deplete that storage faster than what they have in the past if they have any kind of weather or winter at all.
Right. Right.
And their storage completely full can only cover 25% of their total needs.
Well, and this is the reason that this right here, this this aspect to where we see how much demand has increased, because this is net supply minus demand. And of course, everything north of the zero line is during the summer period. And during the summer period, we have been dropping, which means less injections. So we are injecting less and less and less. And part of the reason, or part of the effect there, is this tightening. This is the 500 BCF that is tightening there. So that strategic stock and flows, we are setting up. If we have a normal winter, I expect fireworks on natural gas.
And the other thing too is that European storage is not like U.S. storage. U.S. storage serves all the pipeline. The European storage is broke up for about 17 countries, I think. Each one of the countries in the European Union have to reserve some storage. And so depending on where the weather is at, depending on what storage comes out. So you could actually have some issues, some micro issues, to where you have a country that doesn't have enough storage. They can't pull it out because they've already used all their storage and they still need. And so I think it's a little bit more nuanced than what we try to look at it. You just can't compare it to U.S. storage.
Right. Yeah. Well, because they're storing it differently, and that difference is key. Now, on the market outlook, this is some of what the analysts out there are saying. They're monitoring the balance between supply disruptions, supply reductions, mild weather. This is what analysts and traders are looking at, and the strategic importance of LNG exports continuing to bolster U.S.'s position. Now, I'm going to get to a very special activity. And this is taking a look at October storage versus price. And when we look at October storage versus price, we are right here. So let's see. I see Bill. Yeah, getting geeky. There you are. I saw you smiling. I knew something was coming. So right now, if we look at storage, let me draw on this. If we look at storage, we are currently at, let me go over here. We are currently at 3.629 TCF. Okay, if we take a end of season forecast, we are likely looking at 3.871. So remember those two numbers, 3.6, 3.8. Now let's go here. Everything between 3.6 and 3.8 is right here. And what this is a scatter plot of everything in history, where we were at 3.7, 3.75, 3.8, and 3.85. Let's go over here. So one thing I would point out is that if you look, our lowest years, 2019, we are at $2.03 at 3.695. And at 3.875, we were 2.28 in 2015. Every number above that is north of 240. So if we look at north of 240, I would say that the vast majority here is, let me actually download this and open this. And let me bring this over. This will allow me to draw, because I know Bill likes when I draw, and it is.
Because that was 3.L to 3.8, right?
This is right here. So now, if you look at this, this is 3.7 TCF. And I'm having a problem with my drawing tool. Bill likes that. But you can look, the majority of the dots here, this is the cross section of where price meets storage for the month of October. So depending on the week, depending on where we are, Most of this shows that we are in a dramatically depressed priced market because most of these dots are above 280. So what this tells me is fundamentally we are undervalued in a big, big way. At least 40 cents, probably closer to, I would say 60 to 80 cents from a fundamental perspective. From this supply demand perspective, and the tightening that we've experienced on storage, and by looking at, not this one, by looking at the distribution of all of these, I expect that natural gas is not going to be long at this level. There are a lot of traders and a lot of positions, but I will say from a technical analysis perspective, you can see that we have been dropping on volume as we're dropping on price. That tells me that this is not big big traded positions. So when I look at let's just take a few years here, and we've got 2017, 2015, 2020, and 2020, 2017, 2023. So in 2023, we were at 3.7 TCF, and the price was $2.90. So last year, we were $2.90 at 3.7. We are currently probably going to breach 3.7 this week. But bear in mind, we are halfway done with October, and that means we are closing to an end to injection season. So when I look at the scatter plot and the distribution, we are sized for a price recovery from a fundamental basis only. But I would say keep an eye on weather, wxrogue.com, and keep an eye on supply, demand. All of these factors that we're covering here, we cover every week in our service. Plus, you have data, charts, and everything to back it up. But production is stable. It's flat. Imports are up. Mexico exports are stable. LNG is increasing, and our residential commercial is starting to increase. So
So what you're saying is going to get cold in the winter, Brian?
yeah, it's going to get cold in the winter. So
There we go.
You look like a banker in this.
Yeah. So listen, we're going to keep it open for about 5 more minutes on questions. So feel free to ping us. You can also leave a question after, but if you enjoyed any piece of this, if you could like, comment, share, that would be vastly appreciated because it helps us get our message out there because this is important. If energy, oil, gas, natural gas liquids, if those prices, if those markets impact your business, you need to pay attention because these factors are changing, and they are changing on a daily basis, and we keep everybody apprised of what that change is every single day. So yeah, we're going to keep it open for about 5 more minutes.
So on that scatter plot, we were looking at that, Brian. Just because we're undervalued right now doesn't mean that that's going to change anything. It just could be an anomaly. It could be we're down there at the bottom of the chart, just goofing off down there because because the fundamentals aren't there.
Right. And in 2019, we were at 3.695, and we were at $2.30. But 2019 was before some of the LNG. Well, let's actually look.
What was our supply in What was our supply looking like in 2019? Because I think that was also a high supply year.
No, it was a low supply year. That was from 2018 to 2019, it grew. But I would say 2019 was probably 90 BCF. But you can also counter that with in 2019, if we go back to 2019, we also were exporting close to 10 BCF less. So there's almost a 1-to-1 LNG.
I was going to say.
there's almost a one-to-one relationship between supply and demand.
Because I was
on
looking at the LNG
LNG.
exports earlier today, and I was going to say, man, how fast they've grown,
Right.
and
Well,
how fast they're set to grow for the next 5 years.
and we're staring at another 7 next year.
Yeah.
And that doesn't include Mexico's export or 𝐒𝐞𝐞. And 𝐒𝐞𝐞 is going to impact our supply in a unique way. And if you don't know what 𝐒𝐞𝐞 is, and you are in the Midwest, get ready, because I think things are about to get interesting. Interesting in a volatile sense. So,
And what's interesting, it's going to be daily volatility, whereas usually we see it just in the shoulder months, or as we're going into storage season or out of storage season.
yep.
But I think we're going to see it in the middle of winter.
And Richard, I appreciate you watching and commenting as always, and looking at some of the Gulf pricing and $3 plus. Let's actually look at some of the basis points, because one of the things that I think you're looking at in particular, you're probably evaluating Columbia Mainline or some of the Perryville type pricing, as well as the ship channel. Not so much on Waha, but I think these are the pricing points that you're going to be looking at. Texoak is still a little bit depressed, but I think Columbia Mainline is expected to get a little bit stronger. And when we look at,
I think Texas is going to pick up mainly because our demand just picked up here in Oklahoma.
yeah,
OGT's going to be pulling a lot of stuff gas in there. I mean,
and I'm working from memory here, Richard, but I believe Columbia Mainline is where your value resides, if I recall correctly. But look at this forward curve for Columbia Mainline. This is actually a forward price as of yesterday's close, and during the first part of 2025, you're basing around this 250 level. But look at it take off. It goes to 280. Then in the winter time frame, I mean, we are looking at some pretty significant stair step up. So your base is going to move from 260 probably to 280, then 320 as a floor. So Richard, let us know offline if you want to talk about that, because we can do some forecasting for you. But that's what we're looking at, and that's what the forward curve does represent. So Richard, thank you.
folks, as you can see here, this natural gas, these basis points, just slide it up a little bit. We do cover TTF and JKM. So
Yep.
we do cover the title transfer facility in Europe, which is that 1249. That's delivered into that facility. And JKM is the Japan Korea marker, and that's delivered into that area as well. So we do track those. And when you start watching the correlation between that and Henry Hub, you're going to be beginning to see what the shipping price is.
Right. Well, the spread is $10. That's not necessarily just the shipping, though. And unfortunately, you're looking at ship channel. Let's actually take a look at that, Richard. Let's take a look at ship channel. That's right. And where is ship channel? It didn't pick up. It didn't pick up ship channel. I don't know why. I got to get that fixed, but I got a forward curve for ship channel. Ship channel doesn't look as bad as you think. And part of the reason is that you're going to have some slower fills of the Permian pipes. Ship channel has been negatively affected because of the Permian pipes, but you're going to see a lesser effect. Matterhorn is already in service, but it's not full. Now Waha prices are getting depressed again, and that will spill over to Houston Ship Channel, but there's some discussion of Permian shifting some up, because what we are looking at from a macro sense, and this will give you an idea, is right now we have so much gas coming in from Canada. We have about 6.5, all right? And here is the possibility of what's going to happen. 𝐒𝐞𝐞 over here is going to take 2 BCF, 2 plus BCF. Now Canada is drilling, but it is going
to. It won't
to,
all come out of that 6.5, but even if one comes out of it,
some of it is going to come down.
yeah.
And then you look at exports. Exports, this is 6.5 right now. So right now we're net neutral. So in the Midwest, the Midwest has been shielded from some volatility, and that volatility is probably coming back because they're going to get less from Canada, and most of the Waha Permian molecules are going straight down here, which is impacting Houston Ship Channel, which, by the way, Houston Ship Channel is minus 13. I was showing you Columbia Gulf mainline. That's minus 30. So that's actually a better price than what we were showing. But what this is going to do is it's going to move molecules more this direction, because currently there is molecules from the mid-continent going this way. It's going to shift more to the Midwest because it's got to displace this, which means more Waha is probably going to find its way up here, which is going to make Houston Ship Channel stronger. That's my thesis, and I'm sticking to it. So hopefully that made sense. If that didn't make sense, hit us up for a meeting, Richard. It's been a while. So
It has been.
yeah. So listen, I think that's all we have. If you have any other questions or comments, hit us up on this. But please, please
Reach out to us.
Yeah, please like, please share, please repost, please help us get this out there, because we want to help spread the message about the energy markets, because they are rapidly changing every single week. And next week we're going to talk about it a little bit more. We might pivot. I'm not sure if we're going to talk about crude oil. We might talk about natural gas liquids. I'm not sure. So
Or we can even talk about LNG. We'll be talking about what we're going to do.
yeah.
But folks, reach out to us, ask us questions, send us questions. We'll be more than happy to answer them while we're live or to answer them offline.
Yep.
So,
and remember, it is October. So
Because I've seen enough horror movies to know any weirdo wearing a mask is never friendly.
no, never friendly. So it is October. So it's time to it's time to get ready for how.
Dead people.
Oh yeah. but listen, folks, thanks so much.
that's usually my last flight out when I'm coming out of Houston.
Richard, great seeing you. Thanks for the questions, and Ship Channel. I'll if you hit us up, I'll get that for you. So listen, come join us and help us get this message out, because this is important about the energy market. So we
Be
appreciate
part
you.
of the community.
Thanks for watching. So that's all I got. Any closing words, Bill?
Just come be part of the community, and we'll figure all this out together.
Yep. So thanks so much, folks. Talk soon.